What's going on, guys? Welcome back to my channel. Hope you're having a great Saturday. I thought I'd make some videos talking about, technical analysis, recaps, and things like that. But I also thought I'd talk about videos about just general market theory. And so that's what this video is going to be about, just general market theory. Today I'm talking about a sector that I think has been beaten down a lot, especially compared to the other sectors. As you guys know, most of the major indices have been taking a bit of a hit over the past, few weeks at least. Let's take a look at the Nasdaq. How many weeks of consecutive downside we've seen? That's about 1, 2, 3, 4. With this last week being particularly bloody. And the same goes for the S&P 500. 1, 2, 3, 4. And just take a look at the size of this big red candle over the past week, even though it was only a 4-day week. So that sector that I want to talk about is actually semiconductors. And it's a bit of a technicality. Semiconductors may not be a sector, but rather an industry. But for the sake of just semantics, I'm going to consider it to be a sector. So anyway, I have here pulled up ETF.com, and I also have pulled up the top 10 holdings of the semiconductors, and that's this list right here. So Intel is the #1 holding. Taiwan Semiconductors is the #2 holding. QCOM is the #3. Texas Instruments is the #4. NVIDIA is the #6 largest holding, but even NVIDIA represents 5% of this. So NVIDIA represents 1/20th of all of semiconductors ETF called SMH. Broadcom is another one that's kind of popular. AMD is probably one of the most popular ones on this list, and the top 10 holdings make up 63% of SMH. So when we're talking about sectors that have taken a hit and that perhaps can provide more value for your dollar right now, of course, all of that is relative depending on how you feel about semiconductors in the long run. If you feel like semiconductors will continue to have trouble, then this may not be much of a value for you. Me personally, I do think that semiconductors are going to be valuable going forward, and I'm a huge believer of Mori's law, which is talking about semiconductors in general. Why don't we go ahead and take a look at that. So Mori's law asserts that the number of transistors on the microchip doubles about every 2 years, though the cost of computers is halved. So computers are getting less expensive, and semiconductors are getting more and more important and popular. Gordon E. Moore, the co-founder of Intel, made the observation that became Moore's law. And another tenet of Moore's law is that the growth of microprocessors is exponential. So as far as talking about the technologies within these computers, I think they're becoming more complex. And as you guys know, all these different products right here, transistors, microprocessors, caches, things like that, all that is becoming more and more relevant, and there's only going to be, maybe a handful, I'm talking about 20 companies that are going to benefit from this new type of revolution that we're currently in, as technology and AI and just pretty much everything under the sun starts to get more popular. So anything within technology, I tend to give a little bit more, the benefit of the doubt. If we were to take a look at XLK, which is the technology sector of the S&P 500, so this is a superset of all types of technology, and this includes semiconductors within it. As you guys can see, these are the different sectors within technology. And of course, technology is the huge, broader category. So what we see is software and IT services, computers and phones, things like that. That's usually companies like Apple. And semiconductors is actually third here. Communications is #4. Electronic equipment is #6. Machinery equipment is #7, etc., etc. But as you guys can see, there's just so much weighting within these top 3 sectors of technology. So that's something that I kind of want to make clear, is it's hard to not place such a positive bias when we're talking about sectors that are going to outperform relative to the whole market going forward, when we're a part of a technology revolution, and there's no question about it. So I'm pretty bullish on NVIDIA, or sorry, not NVIDIA. Well, I am bullish on NVIDIA, but just talking about semiconductors in general, I don't think it's the case that only a few of these guys will survive. And that's kind of the narrative that's been pushed out recently, is that well, clearly AMD has been doing the best over the past few weeks. If we take a look at their performance looks nothing like the sector that it's in. As you guys can see, semiconductors have been taking a huge hit over the past 4 weeks, similar to the Nasdaq. But in fact, the retracement that we're at relative to this entire rally that started on December 24th of 2018, we're already near the 0.618. Whereas on the Nasdaq, I think we might just be at the 0.382 retracement. Yeah, exactly. So we're at the 0.382 retracement for the Nasdaq. So we've retraced, I wouldn't say double, but a pretty significantly larger amount than the Nasdaq. So going back to SMH or semiconductors, you guys can see this retracement has been a lot deeper. And I almost think that semiconductors at different points in time can act as leading indicators for the Nasdaq. But anyway, that's a different discussion entirely. So yeah, as I was saying, I don't think it's a situation in which only a few companies, such as AMD, even though they've been doing so much better than semiconductors, over the past few weeks, I don't think it's a situation in which only one or two of these guys will survive and the rest of the companies in that sector will become irrelevant. This is a lot similar to what I saw in XLP, also known as consumer staples. I want to say towards the beginning of 2018. So the entire stock market in the beginning of 2018 saw a few weeks of heavy consolidation. Actually, it was about 2 weeks of just huge drops. If we take a look at the S&P 500, that's exactly what we got, okay? 2 weeks of huge drops followed by a bounce, followed by a smaller drop, followed by a rally. Whereas consumer staples, which is stocks like Procter & Gamble, Johnson & Johnson, Pepsi, and things like that, we got those 2 weeks of heavy selling. We got a weak bounce attempt, but we continued lower. So this was a divergence that I was watching out for, and to me, it wasn't sustainable. So I went ahead and I opened up a lot of positions on M1 Finance in consumer staples, and it ended up paying off. And whenever we see some sectors showing weakness more than others, that's something that I need to pay attention in. So again, if you guys aren't as bullish on semiconductors as I am in the future, maybe you guys work in that particular industry, then maybe you don't feel like this is a value, and that's okay. I'm not saying that semiconductors are going to go up just because they're down right now. It's possible that semiconductors just never continue to go up and have a hard time in the coming months and years. Like, that's completely a possibility. I'm just talking about rotating sector weakness, which is something that I always want to pay attention for. So let's go ahead and take a look at some of these large holdings. So the first one I want to talk about is Intel Corporation, which makes up about close to 12.5%. So close to 1/8 of this entire SMH ETF is Intel, ticker symbol INTC. So what are we showing for Intel? The amount of drop here has been pretty massive. It's been about 5 or 6 weeks of drops for Intel. If we were to rally from here and get back to the 52-week high, that would be about a 35% gain. So that's potentially an upside target if you guys are into 52-week highs as targets. As you guys can see, I drew a green support line right here. Clearly, it's acted as support ever since the week of October 23rd of 2017. So it's quite a long time. And I think even if that support level drops, one other additional level of support here is a 200-week moving average, which I would expect to hold that support. So seeing as how bullish this trend has been, for the most part, this entire moving average has been green and sloping upwards. This looks pretty healthy in my opinion, and it's totally fine to get back and retest this area. So I'm not exactly concerned with Intel. If we take a look at a daily time frame, one thing you'll notice is just how oversold daily RSI got. So daily RSI got as low as 19 around May 10th of 2019. So that's pretty ridiculous. We did go on to make some lower lows, but we made some higher highs in the RSI, which is also known as bullish divergence. So all in all, I think we're pretty oversold on semiconductors, and I wouldn't be surprised if we do get maybe another week of selling or something like that. But for the most part, I'm liking the way these look, especially for a bounce in the short term and even the long term. So I'm really liking Intel. And if you think about it, one kind of rule that I like to have, and again, I'll make another video about this, but one idea that I have is when you start to see certain companies pop up over and over again in different ETFs, especially something like SMH, like semiconductors, which is pretty popular. When you start to see some companies make up large chunks of those ETFs, think about all the passive money that goes into ETFs, and the lack of stock picking as we're starting to see, which I think is a real trend nowadays. So money is going to be distributed in an unequal manner, and it's going to heavily bias a few companies over others. So what I like to watch out for is top 10 weightings of certain ETFs. Intel clearly taking a lead. So if you guys want some exposure in ETFs in general, then Intel is not a bad bet in my opinion. I think I'm going to skip Taiwan Semiconductors, but I do want to talk about a couple others. The one that excites me the next most is actually NVIDIA. So NVIDIA is showing extreme oversold levels. RSI currently at 19. If on the daily time frame, if we take a look at when the last time that happened, it's hard to find that time period. Even here, around 2012, RSI got to around 24 or something like that. So this might be the most oversold that NVIDIA has been on the daily time frame in the past like 5 years or something. And I don't even think it's worth it to go back and try to find that out. But anyway, good things do tend to happen when we start to get oversold. Let's say below 25 on the RSI. As you guys can see, we got oversold a couple times here, led to pretty significant bounce of about, I don't know, let's say 40-ish%, close to 50% of a rally, and that kind of thing. One thing that's worth noting is that the 200-day moving average is sloping downwards, but if we zoom out a bit on the weekly time frame, long term still looks pretty decent. So that's just a matter of time frames, really. That's one thing that I'm going to be completely honest with. From a long-term perspective, NVIDIA looks a lot better than the short-term perspective. But anyway, going back to daily RSI, generally good things tend to happen when we get oversold on the RSI. For example, here we got to around, I want to say 32. Clearly saw a strong bounce. These past couple times, we did have to get a couple touches of bullish divergence. But even after that resolved, we obviously got a lot more upside. Let's see here in, what is this, October 13th, 2014, RSI got to around 23. Clearly saw a strong bounce afterwards, and that kind of thing. So NVIDIA, in my opinion, is extremely oversold, and I'd be very curious to know what happens, or if we're going to continue heading on lower. I do think that this one is maybe closer to being underwater than the other semiconductors, so I would watch out for this one. But this one on my Robinhood account happens to be my largest semiconductor holding. So if that means anything to you guys, then I'm just putting it out there. But I do like NVIDIA quite a bit. The other stock I want to talk about is Texas Instruments, ticker symbol TXN, which makes up about 6% of SMH. So Texas Instruments is hanging there around the 200-day moving average. The amount that we've retraced has been a little bit over half of this entire rally from November 2018. And as it stands right now, I do think that this is a pretty decent buying opportunity. Texas Instruments tends to be more of a blue chip type semiconductor, a pretty nice dividend yield that pays quarterly, and they grow it pretty quickly. So if you're into more blue chip semiconductors and perhaps maybe less, I don't know, speculative, then I would look into Texas Instruments. Yeah, I think for the most part, you guys can research some of these other ones. I don't want this video to get too long. This is really more about just a theory and idea between buying into sectors that are showing weakness. I don't think that this is the end of semiconductors, even though they're having a tough time right now. I think that this is just another buying opportunity. So I'm starting to buy some more semiconductors as the days goes on, especially in the last couple of days. So wanted to share with you guys that idea. Again, this is no guarantee that semiconductors are going to go up just because they're showing weakness now. That's not the way the stock market works. But if you guys were interested in value investing and you guys believe in semiconductors long term, this is an opportunity potentially for you guys. So Hope you guys enjoyed the video, and I'll see you guys in the next one.